Hello, I'm Nick Cheek, Managing Editor of Mortgage Solutions, and welcome to today's debate in association with Family Building Society. Let's introduce our guests. We have Darren Deacon, Head of Intermediary Sales at Family Building Society, Richard Merritt, Director of Strategic Relationships at Simply Biz Mortgages, and Greg Cunnington, Chief Operations Officer at LDM Finance. Welcome to you all. Lovely to have you here today. So, Darren, turning to you first, what innovative products are we seeing on the buy-to-let market at the moment?
Okay. Well, I suppose many people would not class us as a buy-to-let lender or buy-to-let specialist, but we certainly do. We do have a few little criteria tweaks and specialisms that we offer. Yes, we offer buy-to-let limited company. We offer buy-to-let for expats as well, and obviously the UK landlord that we can look after as well. One key product that we offer is buy-to-let offset, which is very unique in the marketplace. And being put simply, if you've got a portfolio landlord, they could bring one property out of their portfolio, bring it along to us, and put their cash, their surplus cash, in the buy-to-let offset account. They can offset that buy-to-let mortgage 100%, fully offsetting, no payments to be made if necessary. It's a fully sort of transparent product in that you can take money out, you can put money in. It's all done electronically. It's an all singing, all dancing product as well, in that you can overpay, you can underpay. So something like that is an innovative product, something that not just restricted to landlords, but for people to simply have a bit of cash that is doing nothing in whatever savings or current account that they happen to have the money in.
Excellent. Greg, I'll just come to you. What innovations are you seeing in the market in terms of product?
So first of all, Dan, we definitely think Family are a good buy-to-let lender, don't we? I think any lender with limited company, expat and offset definitely ticks all those boxes. On the innovation front, twofold, and it's two quite different answers. First is top slicing, which I mentioned previously. But what I mean is true top slicing with affordability. So previously, lenders would say, if it doesn't fit the 125 stress test, we'll top slice to 100. That now doesn't work. You need a lender to actually step back and go, OK, let's look at this client's full affordability assessment and scenario. Does that still work on an income basis? And the lenders who do things there are doing really, really good lending in the buy-to-let space. The second is limited company, which I think we're genuinely seeing about 95% of our purchases now on a limited company basis. And what we're finding is, whereas 2 years ago, somebody would just spend £80 to set up a SIP code and do a limited company and there we go, they're getting much more sophisticated tax advice now. And we're finding lenders are being more innovative in allowing that. So there are some lenders, for example, who, as long as the applicants are the sole directors of the company, will allow kids to have unlimited shareholding, which is obviously great. We're seeing a couple of lenders who allow somebody to do a 5-year fix in a personal name, and then if they incorporate within that 5 years and switch to a limited company ownership, they will waive yearly repayment penalties on that 5-year fix and let the client transfer the mortgage with them. So I think it's that kind of innovation to support the limited company and professional landlord is really helping things.
Excellent. Rich?
I'd come back to exactly what Darren was saying on offset. If you look at the last period of time from COVID through to the cost of living crisis, for most landlords, it was a cash flow issue. The number that took up the payment holiday initiative in their droves is testament to that. It was a cash flow crisis for retail businesses, for lots of people concerned. And I was talking to a Simply Biz intermediary firm, buy-to-let specialist, and their hard and fast view is that every landlord should have at least, a portfolio landlord should have an offset product in their portfolio, not necessarily on all of them, but enables them to sit, have the money, proof against further future interest rate rises, which today they look more likely, might change next week, and also other future costs that are coming down the track, whether that be things like needing to green the home, proof against rental voids and what have you. But I think it's about, Greg used the word sophistication, it's about actually having a sort of more portfolio approach to what you do and having products in different areas that suit your requirement. And I think offset can be a great tool in a landlord's portfolio to help address some of the challenges that we've already discussed.
Excellent. That's a really positive message, I think. So, we've talked about innovative products. We've put aside the kind of doom and gloom that we're seeing in the nationals these days. I just want to ask one final question, which is, very simple one, really, although it might not have a simple answer. I'm going to ask you, Greg, first. What do you see as the future for BTL?
So I think, again, I'll go back to the word resilience. I think we'll see gross lending slightly down this year on buy-to-let lending, but standing very strong. And I actually think we'll see landlords strengthen their grip on the market in the next couple of years. I think we may see some accidental landlords leave the market. I think that's very natural with what's going on. But we're finding professional landlords actually wanting to expand their portfolios, increase things. So I think we'll see a bigger move to limited company in the buy-to-let space.
Yeah.
But I definitely think we'll see it be a significant part of the market for years to come.
Excellent. Rich?
I'll come back to the word sophistication again. I think we've seen this sector become increasingly more specialist because of all the challenges that we've already detailed. It isn't straightforward to do the majority of buy-to-let transactions, and therefore I think there is a need from a customer perspective for a more sophisticated level of advice. Addressing things like limited company requirements, all of the tax changes, tax impacts, potential future EPC requirements and that sort of stuff. But that level of complexity, provided brokers remain at the front of the education side of things and are aware of the potential solutions and options that are available for people, the value of advice and therefore the importance of the intermediaries in this sector to landlord customers cannot be understated. It's a real opportunity there.
Excellent. Darren, final word from you?
Well, difficult to add anything really to what's already been said. The words resilience and sophistication, I totally agree. I think it will evolve. People will adapt when there's adversity. Yes, the accidental landlord may fall by the wayside, but your buy-to-let landlord specialist, the landlord, professional landlords, they are in there for the long game. And lenders will need to be innovative, need to think of new ideas, and as ever, as I say, that will just keep evolving through. So there's always an opportunity for someone, be it the landlord or be it the lender.
Thank you very much, gentlemen. It's a fascinating discussion about an evolving, sophisticated and resilient market. Thank you very much.
Thanks, Nick.
Thanks. And thank you for joining us, and we hope to see you again next time.